Good morning. It is Monday, March 19th, around 7:30 a.m. Eastern Time. Taking a look at the pre-market charts of what's been unfolding. We've got the US dollar index, and on Friday I was pointing out we had this key support level here, and if it was going to break, we'd probably see it move back down somewhere into this lower range here, which would be the tops of all these previous highs, and this kind of pivot low area. This would act as a pretty good support zone, and then of course to fail that, we would come down right through the middle of the noise, which will be the major kind of support level around the 79, which is where a majority of the volume will have traded, and from there it would get likely a bounce. But then the question is it going to bounce back up to one of these lines here and then continue to head lower? So looking at the chart, on Friday I pointed out in pre-market trading we come right down to this line. We're just starting to bounce, and for a few hours in the morning we saw it just kind of trade sideways there, and then eventually through the day we saw it just kind of plunge down through that support zone, and now it's formed a pretty tight little flag, bear flag, on that chart. And just doing a simple measured move, you just look at this move down and then the flag and another move down, we'd probably be coming somewhere right down into this support zone down here. So I wouldn't be surprised if we see the US dollar take another plunge, but there is going to be lots of support down in this area where it's trading right now, which is probably one of the reasons why it hasn't really moved much lower yet. It's just been trading sideways here. But I wouldn't be surprised if it comes down to the 79.50, 79 range into this zone before it finds some more support and actually probably tries to put in a bounce. So if we do see it sell off this morning, we might see a little bit of a bounce in stocks and commodities this morning. But if it does move back up, we'll probably see those gains be negated. Now looking at the crude oil chart, here's the 4-hour chart of crude oil. We got taken out of that trade on Friday or last week, and you can see it's still trading in a relatively tight range. We've had about a 5-wave correction, and it made a new low with a spike down there. Took us out of our stops at break even for the balance of our position, and then from there it has had another run up. Now it is trading up at the upper range of its resistance kind of level here. If you can just see this kind of little bull flag that's been forming. We'll see how that plays out, but there was pretty good selling last week, and we saw it break a pretty key support. Usually you see a 3-wave correction, and from there you'll see it head higher, but instead it's done a 5-wave correction, a little more complex. And of course this pivot low here, when it got triggered, you can see the surge of stops that got triggered, and then the market reversed. So that's kind of where crude oil stands overall. The chart still looks pretty strong, and it's still trading within this pattern. If we do see some type of setup in the crude oil chart, then we may be looking to go long, and we could see it go up to the 110, and the main target that I've been pointing out is the 114 level, up this area. So we'll see how that plays out. Overall, I don't want to buy it right at resistance here. Crude oil continues to be getting stepped on every time it gets up into its upper resistance trend line. So we'll see how that kind of forms and go from there. Looking at the gold chart, this is a 4-hour chart of gold. Gold's had a pretty good pullback the last couple weeks, and if you just look at this price action, in my opinion, it still looks like it wants to go lower. And we've had nice multiple lows, and we're still seeing some pretty strong volume though on the selling side. We're seeing lighter volume as the market just kind of drifts a little bit higher. If we zoom out on the bigger picture, it feels to me that we could see gold go into one more really sharp move down into the 1600 area, which in my opinion would be a pretty major level. It's a whole number. Generally there's going to be lots of buy orders sitting at a whole number. It's also a support trend line from the breakout of its large flag that it had, and of course it's going right through the middle of this noise here. So you've got your high, your low, your high, your low. The average price is going to be pretty much right through the middle, and then of course you've got this previous pivot lows back there that are going to act as a support zone also. Not to mention we're just getting oversold, and the chart is starting to show that we're getting oversold. So if we can get down to the 16 area, I'll be very inclined to look to get long gold, silver, and possibly gold stocks. But I really do feel as though we're going to see one more wave down. Even if gold has put in a bottom, it needs to form some form of a base before I want to get long. It's a bit different play as to what this would be. This would be an extreme oversold situation into a support zone, and I'd be trying to just pick a short-term bottom with a small position. You get a knee-jerk reaction up, and then you'd see it start to form some type of bull flag, and then eventually it could go sharply higher. So that's kind of, they're both different type of plays. I'd like to see this washout, sell out right down to the 1600 area, and look to pick up a small position to kind of bottom fish for gold. Now looking at the gold mining stocks, continue to underperform. They continue to lag here, and if we just kind of look at the chart, we're getting to that point where they're getting into that sweet zone I've been pointing out. We have this bear flag formed. Usually a bear flag is a halfway mark. You just take this measured move to the downside. We're looking for something around 48, 48.50, which breaks this previous low. And you notice when the market is heading lower, you get lower lows. So you have a low here, and then you get a lower low and a lower low, and we'd want a lower low somewhere down here. And usually once you make those lower lows, that's when you get a sharp bounce. And this pattern here is showing us a nice oversold situation, and we're getting close. We've got a little bit of a bearish pattern here. It looks as though gold mining stocks want to squeeze a little bit lower, trading at 49.93. If we get down this 48 area, be pretty inclined to want to pick up a position and get long, but I'll reanalyze the precious metals sector when we get there. The question is, do we go long gold, silver, or gold mining stocks? And we'll kind of reanalyze there. I don't need to load up in all of them, but we'll see what the charts are saying, which one's got the best looking opportunity and the lowest amount of risk. Looking at silver, here's the 4-hour silver chart zoomed way out. You can see we had that pierce through the resistance. Since then it's just been falling back down. Overall the chart still looks as though it wants to go even lower. We've got the nice bounces going lower, and we're seeing this little bearish pattern. In my opinion, we could see a very sharp drop right down even further, all the way down to the possible 30, which will be a pretty major hole number. Of course, we've got through the middle of this noise here, we've got probably pretty strong support. But you can see here the volume is still very strong on these downdrafts. We had a couple strong sessions here where silver dropped, and it's done this little bit of a flag on a little bit of declining volume, but overall the sellers are still very present, and we haven't really had that big. We want one of these long selling spikes here to the downside. So if we can get one of those, it's going to pull us right down to a nice whole number around a decade number, which is 30. A decade number is something like 10, 20, 30, 40, 50. So a decade number will act as very, very strong support, and of course you can see back here we had it as resistance, and then it became support, and we're still above it, so it would act as support also. So if we can get one of these nice flush out kind of washes here in the market where we see it just purge and dump shares, then we'll be looking to get long. Now looking at the SP 500 daily chart, this is the kind of the big picture where I've been pointing out for a while, where I think we've been trading. Something similar to this is what I was pointing out that we're likely getting into. And if you just look at these levels here, you can see we had panic selling here back in time over here, and then we had a little bit of a wave of strong buying, which took the market right up nice and strong to new highs. And that's what I pointed out. We saw the same thing. We saw strong selling, and then we got some strong buying, and we've pulled up to new highs. You can see that it takes quite a few sessions, 5-6 sessions usually, for the market to top out, for this final surge of everybody piling into the market. And that's kind of what I pointed out last week, and that's what we need to find out this week, is if we're going to see the market dump now that options expiry is done. And pretty much everybody was getting all giddy and wanting to get long last week after the big move up. Everybody was piling in at the very top. Market barely went any higher, grinded about 0.5% higher, and everybody was piling in. And that's the same feeling we had back here when it did that. So the question is, are we going to see some pretty strong dumping in shares and see it pull down and get some churning in the market? So that's kind of where we stand this week. If we start to see a setup for the downside, we'll be looking to play the drop. But if we get a strong, more or less a minor pullback with still strong underlying strength in the market where lots of stocks are hitting new highs, we'll actually be looking to buy the dip and look for a continued move higher. So right now we're at a tipping point. We could be going long or short this week. We're just going to keep our eyes open for whichever setup looks to be have the higher probability. Looking at the futures chart this morning, here are the past two trading sessions, and here is Friday's regular trading hours. So this is a 24-hour clock. You can see in overnight trading, we've seen the equities market move up a little bit higher, kind of topped out, and early this morning we've seen it just kind of steady selling into the market, and now we're kind of forming, by the looks of it, probably a little bit of a bear flag. And if this does play out, this bear flag, we're working up into resistance here. So if this bear flag plays out, eventually we should be coming back down to about the 1390, 1388 level, which will coincide with this support zone here from the previous kind of session and consolidation. So that's kind of what we're looking for. Again, if we're lucky, we'll see this market continue to head lower. We'll see the volatility index pick up, and that'll send our VXX play into the money. And if we see continued strong selling, we'll see the VIX spike up very quickly, and we'll be able to pocket some pretty good change and likely maybe get a short on the market. If not, our VIX goes up in value as the market tanks, and then we'll be looking to go long stocks. Once the market finishes purging out, we'll cash out of our VXX and we'll get long stocks. So that's kind of where we stand right now and what we're waiting for. So I'll talk to you in a little bit. Bye-bye.